Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. I found this old t-shirt that I figured I'd wear today. I thought it'd be very fitting. Look at that. Buy the dip. I don't know if you guys could see it well or not, but I thought it would be pretty appropriate because this is the time to buy the dip. Now, I'm going to show you guys. We're going to be opening up in about an hour and 26 minutes. The Dow's down only about 114 points. The Nasdaq is down quite a bit. We've got a big report coming out in about 26 minutes, the durable good orders. And as you can see here, the consensus is just all over the place. Negative 0.1 to 2% positive. Consensus on new orders is half. It'll be very interesting to see if this number is better or worse. If the number is good, if there's a good order of durable goods, that means the economy is moving better than if there is a slowdown. So it'll be very interesting to see how the number looks minus the transportation too. As you can see here, we're looking at a consensus of 0.5 positive, 0.6 positive, and core capital also about 0.5. So that's the consensus. We'll get the numbers in just a bit. One of the things that I'm really liking right now is the fact that the Russell 2000 is starting to diverge from the rest of the market. If you look at if you look at the QQQ yesterday, for example, just to show you an idea of what I'm talking about, you'll see that we're closer to the lows. We went down, but the Russell maintained its composure and the lows are getting a lot higher. I think one of the reasons that's happening is because Biden is trying to work out a deal with China where we don't have as many of the tariff issues. We're not as punitive on the tariffs in regards to China, something that Trump was really tough on. We'll see how that goes, but that is causing some upside here. Another thing that's happening, and I told you this would happen, I told you it was just a matter of time. On a monthly basis, look at communication services where it is now. It's not in the last spot. It's not in the second to the last spot. It's not even to the third to the last spot or fourth. It's now almost in the middle. And look at this. Consumer discretionary down 23% for the month. Communication services only down 9.57. Who told you that was going to start happening a month ago? Right here. Now, cumulatively, it's not as pretty. Communication services is still at a 19, but I'm telling you right now, if we continue seeing what I'm seeing right now, communication is going to go above financial and technology. I think communication's been on the back burner for quite some time, and there's a lot of stocks in there like AT&T, PayPal that are starting to move. Also pay attention to Google and Netflix. They're in that category as well. That communication services sector has a lot of market capitalization. Put the call ratio remains inflated to the put side, which means we could still expect a big rally. And again, notice, since November 5th or 8th, nothing penetrating the call side, which means that rubber band keeps tightening and tightening and tightening. And folks, when it snaps, we're going to have a bull rally like we've never seen before. This is, again, indicative that markets are deeply oversold. And if they remain oversold, we're not going to, basically what I'm trying to say is they are mean reverting. They can only stay here for so long. And once they come up, we're going to see a rally. When you see the market moving like this, that's going to be a big rally because all the put buyers right here are going to be offsetting their puts and moving into calls. And I haven't seen that. I mean, we've barely been below the middle line now for, let's see here. I mean, for a while, for over a month and a half. So the point is, the bears are obviously outperforming the bulls, but it looks like if we have a turnaround, we're going to move in the right direction to the long side. And again, the fact that we're staying so long above one or near one around this green line is telling us that the markets, that rubber band is really deflating or causing the markets to stay near the low end of the range. Now, volatility. We went again to the lows, but again, we can't take last week's out. This and the small caps, the fact that small caps are diverging, can't go lower, the fact that volatility is now, the highs are getting lower, and the fact that where is that thing? The fact that communication services is now on a monthly basis starting to really come up, almost halfway up, is a very strong sign that the worst is actually behind us, or we're very close to the bottom. Let's talk a little bit about global economy here. So Investors are on edge about the impact of interest rate hikes in the United States and other Western economies to cool surging inflation, as well as Russia's war and Chinese economic slowdown. And I'm thinking we may be having another COVID scare here in the U.S. because I know several people now who have just gotten it. Investors dumped social media stocks. Snap plummeted 43%, biggest single day drop. Facebook 7.6%, Google 5%. But you know what? Communication services still maintained its relative strength, and it's only moving higher. The S&P is now down 18% from the January 3rd high, putting it on the brink of a 20% decline. Home builders slumped after the government reported April sales of newly built homes slumped 26.9%. And I told you about a year and a half ago that usually these KB homes and these type of stocks, they peak out about a year and a half before the market starts cooling off. It's been about a year and a half. On Wednesday, the Federal Reserve is due to give insight into its decision-making by releasing the minutes. That's coming out at 2 p.m. right here. And where are we here? And that's going to tell us what they're thinking. I think they're going back and forth, but I think most of them want to keep stability in the market. They're right now dancing a fine line between rates going higher and causing us to go into a recession. So it's a very, 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 very delicate balance right now that they're doing. In terms of earnings, we're going to see earnings on Nvidia after the closing bell today. So far, the stock has been beaten down, and as you can see here, it's down about 0.89. But I would be watching it very, very closely towards the end of the session to see a possible pickup once again, because I believe the stock is already down enough. I mean, look at this. It peaked at 346. It's at 157, and I think it's had enough. I mean, even if you look at the profile of the company, forward PE ratio is only 35, which is not really all that much. And the company's been making revenue numbers, 5-year earnings growth, dividend. I mean, it even has a dividend yield. The point is, this is a solid stock. Earnings per share, this may cause, the reason I'm bringing it up is if this rallies, this may cause a rally in the chip stocks. So you want to keep your eye today on the semiconductor index, which is, by the way, also not making lower lows. So that's another index that's not making lower lows while the market is, while the Nasdaq is. So again, there are some changes right now. And as I keep showing you, and I know this is getting old, but folks, you got to keep in mind that we're right now all the way at the bottom. We're not starting this at the top. We're all the way down here. And that's telling me that we're a lot closer to the downside than we were before. This is not a time to panic. This is a time to start accumulating. I mean, look at this. COVID, last rate hike, 2008. We are at nosebleed levels right now. Now, today is Wednesday. What do I do Wednesday? I give you a long and a short. Well, today, I'm going to give you two longs. How about that? First one, Dow stock, Dow Industrial, not Dow stock, Dow Industrial. And just so you know, it's a stock we've been trading quite a bit. Industrial, material science company. That's the kind of stocks you want to be in right now. And by the way, PE ratio, just so you know, the PE ratio, forward PE ratio is like 8, and the stock 3-year return 43%. Solid stock. Really, really good stock. And if you look at it here, you will see that it's hitting the 50-day moving average, and the RSI is not overdone. This would be a good time to pick this one up. I like this. I may pick it up again. Another stock that I'm liking, also an industrial stock, is Lyondell Basel Industrial, LYB. Like the stock, also moving higher, right at the 50-day moving average. RSI is not overbought right now. I like this stock. These two stocks are great upside stocks right now because as you could see here, the trend is still moving higher and they look like they have more upside to go. Now, on the downside, we've got Cassava Science, Sava. Have you ever heard of this stock? Probably not. This thing peaked out last year. It's been going down. It just rallied. It hit a 50-day moving average from 15 all the way to 27. And there's a really good chance this stock is going to start going down sooner than later and revert back in the direction of the trend. In terms of the Fed data, tomorrow we've got GDP. What you want to do is right now, you want to keep an eye on Nvidia because that's a huge tech name. You want to keep your eye on the bond market because look at what's happening to the bond market. Notice something here? It's not moving down, it's moving up. Another major sign. Now, if you look here, look at when the bond market started going down. December, right? Look at when the QQQ started going down. November, about 10 days earlier. You see that? Well, this, pay attention, this is rates going higher, right? Bonds going lower, rates going higher. What is this? This is rates going lower. This is telling me that the bond market is assimilating most of what the Fed has for us on the table. That's very, very important because that's the first time, I think, since this started or middle, that has happened. That is very, very, very significant, very, very important, and something that's telling us we may be turning around, at least partially, at least for now. But this is a very strong sign that the long bond doesn't want to reflect higher interest rates, that the long bond is actually reflecting lower rates, or the fact that the interest rates in the long term are going to be not going higher, but actually staying same or actually cooling off. That's a very, 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 very positive sign. And that's like the first time we've seen something like this since this major downside. I mean, I think we've seen it here, but no, this is going lower. This is actually going higher. So I think this is the first time we've seen this, and this has been going on since, this has been going on for over a month now, about a month and a half. And remember, bonds always lead. So the fact that this is happening is very, very significant. Small caps not going down anymore, communication services going up, bond market coming around, put to call ratio being overdone, and it looks like most of the downside in terms of Fed data, COVID, and all of these things are beginning to be priced into this market, which means there's a good chance we're going to get a nice, big, fat, juicy rally. Now, folks, I'm willing to bet most traders and investors are banging their head against the brick wall right now, right? But I've been turning to this one indicator to help me isolate these quick, punchy moves in stocks. I call them zip trades. That's right, zip, because they zip, they're so fast. And I'm ready to reveal how the plan that I've been following to smash the market in 2022 works, and how everyone can locate these trades on their own. Folks, click the link below to learn how to start finding these zip trades on your own today. Do not miss out. If you can't find the link, it's in the YouTube Wealth Press channel. Follow the descriptor. Comments, feedbacks, I want to hear from you guys. Send me love letters, support@marketgeeks.com. Hopefully, I'm helping you navigate your way through the market. Follow the link, and I'll see you in the zip trades class. Bye, guys. Have a great day. And remember, buy the dip. Bye.